Hi, my name is Michael B. Hansen. I'm the co-founder and managing partner of Frontier Wealth Strategies, an independent registered investment advisor with no ties to banks, insurance companies, or investment firm. In my 20 plus career in the financial service industry, from time to time I'm asked, what is the best book to read to become financial literate? And what I found is that there are a lot of great books, but the Bible of them all is really The Richest Man in Babylon by George S. Clason. And I will go through some of the key points in this book here because, as I said, it is really the Bible of financial freedom. The first premise of this book is really that a part of all you earn is yours to keep. And what that means is that of course, you have to live within your means, but you also have to save, you have to invest, and develop a portfolio where you can live off the dividend. Passive income, basically, that's where you have to end up, so you don't have to exchange your time for money. There are 7 rules in this book, The Richest Man in Babylon, and the first one is start thy push to fattening. And what that means is that you basically have to start keeping more money than you spend. One of the tricks that I used to do when paper money was important was I would always keep $100 bill in my wallet, not for anything else, but just to know that hey, I have the largest dollar bill in my wallet. I'm not going to use it. It's just going to be there because that is what you can do financially and mentally. It sets you up for wealth. I understand today that, including myself, I don't have any cash on me because we're all using Apple Pay, Venmo, etc. But that is definitely a very important thing to remember, that you have to basically start gathering money. The second law is control thy expenditures. And that's, of course, is very important because you can be broke at any level. Whether you are making 4,000 or you're making 50,000 a month, you can be broke at any level. And trust me, I met clients that have been in that position. And if you can't live off 4,000 a month, you cannot live off 50,000 a month either. It's a discipline that it comes down to, basically. The third rule is make thy gold multiply. And that, of course, means that you can't just have the money in a bank or under the mattress. You got to invest that money so it can start compounding the interest that it earns. The fourth cure is, or rule, is that you guard thy treasures from loss. And that's very important. That doesn't mean that you shouldn't take risk, but you shouldn't take crazy risk. You should take calculated risk. And you should also think about return of principal before return of investments. Me as an advisor, that's always the first question I ask with someone that presenting me with a new investment idea is that let's talk about the return on principal before we talk about return of investment. We've got to be able to get out of this investment. That, of course, there is no guarantee that any investment will do well. But if you get into an investment that is not doing well, you should be able to bear that loss. Very important to think about that as well. The fifth law is that make of thy dwelling a profitable investment. And what that really means is that you need to own your home. You're never going to build real estate wealth if you rent. Now, there can be situation in your life, either you're just starting out or you are retired and you would like to move around the world or so around the country or something like that, where it might make sense. But while you're working or have your money working for you, some of the things that are very important is that you actually own a home. And some of the strategies that I talk about with my younger clients is that your starter home should be a great investment property. So buy a property that you're not going to sell, but you might use it as either down payment or you will pull out some cash from that house or home and use as a down payment for your next purchase. Then the sixth law is that ensure a future income. this is really what we talk about with passive income, is that you gotta be able to go from where you're exchanging your time for money to where your money basically starts paying you a dividend. If you have a business where you have to show up in order for the business to run, the business is really running you. And it's a job, it's not a business. That's what we talk about passive income. You got to have, if you own a franchise or something like that, where you don't have to show up, you have managers running that franchise and the check just shows up every month. That's really what we are talking about here. The seventh law is increase our ability to earn. And what that means is that you have to learn. You have to be a lifelong learner. Every single day, you have to learn something new. You have to become wiser. That's incredibly important to do that when we are dealing with financial investments, because there will always be a new situation. Even though history can be a great teacher, just remember this, that you have to learn, because there's always something new popping up every day. Then we go into some more general rules also mentioned in this book. And it's basically saying people of action are favored by the goddess of good luck. And if you look at any athlete, successful athlete, any successful performer, they will always tell you this, that the harder I work, the luckier I become. That's not a coincidence. That's not really just a random thing that happens. Is that the harder you work, the luckier you become. And that also applies to financial wealth and financial wisdom as well. So you definitely want to be a student of investments, a student of financial planning. The other thing that they talk about is that better a little caution than a great regret. The old saying goes, don't put all your eggs in one basket. And that's really what that is. You need to take calculated risks, but it should be in a way that it never becomes devastating to you. So you should never put more than 5, maximum 10% of your investable assets into risky investments. And risky, as I mentioned, should be calculated risk. It shouldn't be something where you put everything on red at the casino. That is just not a wise thing to do at all. The other law that they talk about is that we cannot afford to be without adequate protection. What that means is really protection planning, insurance, what if you can't work? What if your ability to perform? So you do need to protect yourself. Just like countries have borders, cities, at least in the old days, had city walls. You need to put a wall around you and your ability to make an income, and also to protect your loved ones and your family as well. Those are really the foundation, because at the end of the day, you're the goose that will lay the golden eggs. But if you can't do that, then financial freedom and wealth might elude you altogether. So there you have it. If you want to read one book and learn from that, as you can see, it's not a thick book, so it won't take you too long. But if you apply the principles, you're on the road to financial freedom and to wealth. If you have any questions, feel free to reach out to us at frontierwealthstrategies.com.